Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's bright, it's early, it's about 5:53 a.m. We're going to jump in the charts, follow up on our 4-hour range, and really see if we can get the party started. Yeah, that's the money song. Let's make some money today. I want to do a brief recap as it is the first day of August. Welcome to the month of August. If you aren't having fun yet, just so you know, typically, statistically, the month of August is a red month, unfortunately. If you look at the last, 23 August months, I think 15 out of 20 or 12 out of 20, something like that, were red months. And just circling up here, just briefly, following up on the 4-hour range, and I think spot price action is getting it rather well. So we said yesterday, hey, look, any kind of a 4-hour above 29,500, well, that'd get us a move to 29.8. And any kind of a 4-hour below 29,000, very likely the next stop was going to be 28.8. So here we are. So the question is, why were we bearishly biased going in to price action yesterday? Not because of the news, not because of Elon Musk, not because of the FUD around Altcoin. Not because of that, but simply because of the bearish divergence, which was very, very much present yesterday. As I believe I was making the video somewhere around here, or here, somewhere around here. Let's see, it was 4 times 4. Yeah, it must have been right around here. As there are, how many 4 hours are in a 24-hour period? 6. So 6 candles. 1, 2, 3, 1, 2, 3. Yeah, we were right around here. Okay, so we got 1, 2, 3, 4 drives. 4 drives, which actually, based off of the 4-drive philosophy, should give us drive to the 1618 fib, which, by the way, 4 drives. So I'm talking about 1, 2, 3, 4 lower highs in price, and 1, 2, 3, 4 higher highs. So this is the area to mark it off. Just to confirm, yes, this high is in line with this high, and that's 1, 2, 3, 4 higher highs in RSI. And if you want the textbook definition, you go to bitcoinadvisors.com. Don't forget, smash the like button, share it with a friend, tickle the bell, and yes, we're going to go not to daily market analysis. We're going to go to the resource center. The link is in the description below. We're going to teach you not only how to set up TradingView, which is the first step if you want to become a trader, but about bullish and bearish divergence. This is the cheat sheet. If you want to print that out, copy it down. But it actually explains how to identify bullish and bearish divergence, which nobody in Twitter land seems to care about. But it's one of the most powerful ways to trade, and you'll see me talk about it like very often. So hidden divergence in the context of a downtrend. Price makes lower high, RSI makes a higher high. So we're talking about classic bearish divergence where the price is making higher highs and the price is making lower highs. Yes, this is the one, hidden bearish divergence. RSI is making higher highs. Needless to say, the 4-drive philosophy, off of 1 drive, you go to the 9 exponential, right? So the 9 off of the first drive, which would have been there, but he got shot to the blue 9 exponential. Okay, well that was hit pretty good. The second drive, we are going to go to the yellow 21, which is going to be this high right here, and we overshot that one pretty good. Okay, the third drive is to the bottom side of the range, which would have been this high, and we got to the bottom side of the range. And the fourth drive is going to be to the 1618 fib, which you can go wick to wick sometimes, which, what do you know? From the prior low to high on a bearish retracement, that'll give you your 1618 target, and that is now hit. So what are we looking for after a bit of a mean reversion? Momentum still to the downside right now, as long as we're below 29.58. So are we going to get another 4-hour range? Or are we going to head to our main target, our main source of edge, which has been this green box of peace and prosperity and death and despair ever since way back here after this impulsive move? I think on the 3rd day we said, hey, look, Very, very likely. What's likely to happen after breaking the falling wedge pattern to the... Yeah, we had this nice little wedge in here, and this broke out to the upside. Yeah, pretty nice move. Pretty nice move. Target hit, right? And then what do we expect? That mean reversion play. As volatility declines, we expect the price to head down to that 618, somewhere around there, somewhere between the 0.5 and the 618 is completely okay. I mean, we could bounce out of this thing right at 28.3. That is kind of my minimum base case scenario right now, as we are dipping below the 382 on a 4-hour time frame. What about the daily? What does the daily says? Daily is droopy. If we close anywhere below that wick, it would be immediate continuations tomorrow. Momentum is going to cross down below 28,913 today, so just slightly below there right now. Momentum will head to the downside on the daily with low volatility as we are breaking, and this is in effect a broken down move. So if you are playing the silver cross strategy to the upside, which says when these cross, you buy the green 55 when there's low volatility. How does this move get invalidated? Well, a closure below the range lows, which would be right here, and would be, closed anywhere there or lower. And that pretty much would, goose the odds in the favor of a bit of a inverse, play, which if we were expecting a continuation play to the upside, 20% on a daily volatility play, which, yeah, it still has a chance here. So I'm not, completely, the bears are not completely out of the woods, but essentially, where does this become invalidated for the bounce? Well, technically speaking, it's back below here. So it's completely fine for this to come down. We just want to see a higher low somewhere around there. And after a nice inefficiency candles like that, you expect price action to come down and retest, 28,000, maybe even this area at 27.2. But overall, some reason the price action seems to get sucked into that 618 and the 0.5. So we're going to stick with that theory for now. And what else do I want to point out? Oh, goosing the odds in the favor of the bears was the weekly bearish divergence. What is that? Price is making what seems to be higher highs, but no, they're lower highs than this high right here. And so weekly bearish divergence is going to be much more powerful than, so I'll just move this over here and you can see, I can't believe nobody else is really talking about this. Wow. Might reaffirm my bear case here, but I would call that, two drives looking for a move down to the green 55 at 27,000. Definitely in the cards. You also have this on the 2-day time frame, which also was a dead giveaway here. When we tick below that last 2-week low, you typically get a move down to that 9 exponential. So just giving out my thoughts here, and tips and tricks for reading the market on a macro level, I think is very, very handy. And then on the more shorter term scale, we got the momentum to the downside, volatility increasing, and pressures onto the downside until we can get back pretty much above 29,150, and then more conservatively, back above the range highs. So a lot of work to do for Bitcoin. And what is Dixie doing here? Down oh, look, heading up to our trend line as we spoke about yesterday. And we said, look, deviation below the range. If we get back in the range, likely to hit the green 55 is the first warning. Second warning here, a closure back above here would be bad for risk assets, in my opinion. Not financial advice. I'm not a financial advisor. Economic data coming in today was pretty inconsequential. So again, bearish divergence, if you want to take a look at that again really quick as we had the weekly up. Hidden bearish divergence in a downturn, price is making the lower highs, the RSI is making a higher high. And you can clearly see on Bitcoin, on the weekly time frame, you can see and this is what's a little bit scary to me, not scary, but you're going to have 3 drives. 3, 1, 2, 3. So 3 drives. Where does that get you? 3 drives. To the green 55, or the bottom or the top side of the range. And where's that green 55? Coming in a little bit lower than our target. So do we get a wick down? Maybe even a wick all the way down to 24.6 to take out the liquidity there and then run it back to the upside. What else? So bringing it back here full circle, 4-hour range, immediate continuations. We talked about, basically below that wick there is the 1 hour going to give us any odds to goose in the favor of a bounce here. This nice little indicator could give us a hint of a bounce here. Let's see. Are we going to get the first bounce? Where is it going to come to? Oh, maybe the 618 at the green 55, and that would be where I'd be looking to take the next kind of shorter position on the short term. Bounce time, not necessarily. Hourly range is coming in at 29.3 to the upside, and wow, pretty big range. 28.594 to the downside. A break of that range, even on an hourly, likely gets a decent sized move. As volatility is now been compressed on the daily for some time, and that is a bit concerning because you can get a 20% move in the direction of the stochastic. When we see volatility expand this second time, the first move was a bit of a fake out, even though it did produce roughly, if you count this volatility expansion, where does expansion happen? Above 25%. So we got a, decent sized move so far. Top to bottom, 4%. This puts you at 8%. On the next expansion, so sometimes this is what happens. Gives you a little fake out. The next one probably gets it for sure. 2-day volatility is just lifting off. Momentum to the downside in the critical zone. Not overbought or oversold. This means price action is trending on the 2-day time frame to the downside. Not what you want, not your dream of hope and prosperity. However, if this does cross back up, when it does cross back up, you can have bullish divergence in the stochastics as well. So that would be hidden bullish divergence. Price is making a higher low, RSI is making a lower low. And again, that's why this little chart comes in handy. There is a link in the description below to bitcoinadvisors.com. Again, all you do, go to the resource center here, check out some of our material if you'd like. Let's wrap. So we checked it out on Ethereum, or on Bitcoin. Let's check it out on Ethereum. What did we talk about? Ethereum yesterday, the invalidation point was not hit, not taken out yet. So Ethereum has a doggy in the fight still, like Doggy Coin. Doggy Coin has a doggy in the fight, and short-term bouncy time. Still within this falling wedge. I'd say testing the downside is more likely than the upside. This is where our thoughts of peace and prosperity get destroyed here below 1831 on a 4-hour closing basis. So we had that line in there yesterday. I think we said we were more likely to test that. If we can get back above 1889 for Ethereum, going to look bullish, and the first target would be 1950. Below this pivot, I've laid it out pretty clear here, level by level. Below this pivot, and what happens a lot of times is Bitcoin, invalidated head and shoulders to the downside, a big move. So what am I talking about? Invalidation. So you're supposed to, there's your head, or sorry, shoulder, and then kind of a double shoulder. Inverted head and shoulders, measure move target. We've been talking about for Ethereum up at about $2,400. The problem is, guys, if technically speaking, you should get an inverse and equal weighted move to the downside, or to the opposite side by taking out the shoulder. Where would that put Ethereum? Down at 1528. That would be in line with Bitcoin taking a leg down. So, down. So if you see Bitcoin start to spill out its guts, well, I'd say Ethereum's probably not far behind it. Again, not financial advice, not a financial advisor. And first target down using the fibs on a consolidation basis. Yeah, that does stretch it down quite a bit lower here. But enough for a bounce there, and maybe Ethereum does do something like that. I kind of would be looking for a bounce in general off of this level, somewhere around $1,700 before a major breakdown. And do we see any bearish divergence on the weekly for Mr. Ethereum? Let's check that out and maybe clean up the chart a little bit here. So what are we looking for? We're looking for lower highs in accordance with higher highs in RSI. And, if you count that as a high, that could perhaps catch there. Nothing. Not a confirmed high yet. How would you confirm this as a local high and get a few drives of bearish divergence? Maybe a kick to the bottom side of the range here down at, you'd confirm it by closing anywhere here or lower. So anywhere below, 1816 today, and I would be looking for generally a run down to 1650 and for a bounce from there. That is the 3-day time frame. The 2-day, you do have the golden cross there on the 2-day, so chances for a bounce higher than not. What about the weekly Gaussian channel as we're coming up on the monthly? A little bit longer of a video. I had a little more time this morning. Weekly looks like it wants, this, if it is going to bounce, as long as we don't take out that 1600, Ethereum is looking, more poised for a bounce here on this one. And shoot, it could come all the way down to 1473 and pick it all the way back up. Ethereum is quite an animal when she starts to get going. And you would have the 3 drive. So just waiting for confirmation on the bearish divergence on the weekly. Anywhere, weekly closure anywhere here or lower below the green 55. And yeah, the lower targets become a bit of a threat there, but it's not confirmed yet. So on Bitcoin, to me, that's confirmed. What else do you see? Weekly momentum flip to the downside with extremely low volatility. So if you get an expansion, that's kind of bearish right there. Volatility above 25%. But again, what can it do on the weekly time frame, which could take months to play out if we could get one of these, right? And then shoot it off maybe at the end of the year. But the expansion off of this move is going to be quite significant. As you can see, the last move, well, that was a 100% gainer. Okay, expansion off of this one, right? So what am I talking about? When volatility begins to expand, you expect price to go in the direction of the trend. And this, this expansive move got 68%, and this expansive move to the upside got us, well, it was 100%, yeah, 100%, 114%, so not bad. Or I think it was 100% to that high right there. So the next weekly volatility expansion likely to produce a very, very good move. And last thing I'm going to throw up, it's the monthly. It might be a good time to reiterate some of the monthly time frame things here, and one of them being this monthly chart here. Yeah, Stokes are still up, crossing the PMARP. Volatility is declining. Where are we at on our HPDR? We are closing. Yeah, so this month technically you want to see it close like anywhere here or higher, as long as we're above 27,000. Good, and that would look good for a bounce next month. Quick interpretations. Also, you can see a major low in here, bullish divergence. On the secondary chart that I like to use, you've also got what's called the MACD crossing to the upside, and the histogram turning green for the first time in a very, very long time. It hasn't even produced the next candle yet, I don't think. That was July, so we're going to get one more green month. Let's see what it did on... Yeah, there we go. That's the signature you want to see. Bollinger Bands, we're above the medium. We got the blue buy signal. Accumulation distribution indicator is up. And curvature on the weekly slightly turning down here. So that is not what you want to see. Did produce a negative slope on the last week's closure. So goose for the bears right there. And histogram did turn red on the weekly, crossing down on the MACD. Points for the bears right there. Points for the bears. All right. Dollar monthly. Oh, weekly strong bullish divergence. Looks like a little bit of a fake out for sure there. That's a fake out, and the reversal could be real, and we could get a shot up to our green box of peace and prosperity and death and despair. Again, keeping an eye on Dixie because she rules the market. Dixie is and has been I'm not going to say it. I'm not going to say it today, guys. Stacks, getting in here. Stacks. One to keep an eye on. Fraught with peril on the way down, holding that trend line. And boom, finally got the retest and a shot to the purple 200. Now it needs to get above that wick for potentially a major breakout on this one. Stacks looking beefy here and looking like with the potential for some upside, but if the rest of the market gets killed, not going to look good. XLM also looking droopy. 2 drives of bearish divergence got you a shot to the 21. So could you call it 3, 2? No. Nope. So you got 2 drives. So chance for one more bounce. The next high, if it does get another high, is going to be deathly death for XRP. 2-week. Monthly, how did that monthly look? Yeah, looking right in the sell zone. Okay. All right, that's going to wrap it up for today, guys. I do also see this pointed out here, looking for a move up just right there on the monthly, ticking below last month's low. Not the sign of health and fitness. All right. Have a blessed and highly favored day. I hope you enjoyed some of the thoughts and learned something. If you have a question, put it in the comments below. Thanks, and we'll see you next time.